shorting low-price stocks is one of the favorite strategies of many traders out there. And listen, it is a very viable strategy. Now, if you follow me on social media, if you watch the podcast, you know I like to have a lot of fun and kind of pick on what I call day one short sellers. Now, the biggest reason I do that is people don't understand the risks and what to look for when shorting these stocks. Today, I'm going to talk about that. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to like, subscribe, and share these videos with your friends, and also ring that bell to be notified as soon as we drop a new episode. We got long form podcasts, short form podcasts, trade reviews, tips and tricks like this video. I go live almost every day. There's a ton of amazing content. Ring that bell, and then also be sure to share these videos with your friends. I mean, I was talking about this today in a StocksToTrade team webinar, and people were asking, hey, 2020 has been wild. Do you think things are going to change? And I went on about a 15-minute rant of, I think this is the new normal. I've been actively day trading for 15 years now, and we started going vertical, 2016. And I always use that kind of hockey stick analogy if you follow like business growth. 2016 to 2019 was the foot, I think it's the foot or the blade of the hockey stick. But then we hit the handle in 2020 and just went vertical. Whether it be people stuck at home, whether it be stimulus checks, whether it be commission-free trading, whether it be, listen, we don't talk politics here, but the president for the last 4 years has pretty much talked about the stock market every single day. I think everyone's involved in the market, which creates bigger moves, more moves, longer duration moves, and some of the hottest sectors we've ever seen. We're at the day I'm recording, we're in the middle of an amazing electric vehicle hot sector. I mean, we had like 10 EV stocks spiking today. There's so much opportunity out there. My point is, share these videos to anyone that's interested in trading. There's never been a better time to learn, and mainly because of resources like this. I mean, listen, when I was getting started, there were no YouTube trading videos, and if they were brutal. Hopefully my videos aren't brutal. So anyway, share them, like, subscribe, and I look forward to seeing you on every single video. And then if you're really, really looking to get in depth, check out the StocksToTrade team. Click that link to get started ASAP, twice a day, live every single day. Hopefully my passion for this shows through. I love breaking down these setups. We talk live trades, live setups. I mean, everything is real time. I mean, I'm going to be reviewing a float rotating squeeze play today, but the great thing about the StocksToTrade team, everything live. All right, that being said, let's get to work. So what do we look to avoid from a short perspective? Okay, now I'm assuming most of you understand what short selling is. Now it's kind of it's more and more out there, but it is kind of a misunderstood strategy. So if you don't understand short selling, we've got a ton of videos on it. Basically, the short one sentence summary is you can make money when stocks go down. The big dilemma is you have quote unquote unlimited potential risk to the upside. And what I want to do today is give you those red flags to look out for. So if you do short one of these, you know when to pull that escape hatch and get out without taking a brutal loss. Trading is about small losses. Nobody out there, contrary to what you read on social media, has a 100% win rate. Okay, everyone loses in trading. Keep those losses small. That's how you grow your account. That's how you become consistently profitable over time. So, all right, so what we're looking at today is GTEC. This was a huge squeezer, which is a beautiful dip and rip, by the way. Never short a dip and rip. And if you're unfamiliar with that setup, there's a bunch of videos. It's one of my favorite setups. You can see the left side of the screen, this light gray area is pre-market. The dark gray area is the normal market day from 9:30 to 4. And you can see that, 9:45 GTEC broke the high of day, which is beautiful dip and rip. Love them, love them, love them. So anyway, but a lot of people shorted this. And I think a lot of newbies because they didn't know what to look for. And we're going to start right out with, I call it insane volume. So when I'm looking at volume, one of the great features about StocksToTrade, it's a simple thing, but you can see the 60-day average volume. And obviously, GTEX is actually way higher now because of the high volume week. But you can still see, even now, this is traded, 3 million shares a day with 1 million float. That tells you the float is still rotating. So one of the big things you want to avoid is that insane volume. And you can see it on the daily chart here. I mean, look at all these days through here when this stock's trading a few 100,000 shares. And then the day of the big squeeze, 160 million shares in a day. It's nuts what these can trade in one single day. When you talk about, when I talk about pre-2016, we never saw the volume like this. We see stocks, we saw a billion share stock at Gevo a month ago, billion shares a day in a low price stock. It's just nuts. But anyway, you can see that in pre-market. You can see that float rotation, 1 million float on GTEC. And then let me jump to a 1 hour chart so that I can get you the accurate number. But you can see even in pre-market on that day, you had a candle with 1 million shares, and then a candle going right into the open with, jeez, 45 million shares in pre-market. Oh, I love 2020. It's just amazing. The reason I have to double check that, I'm telling you, and I know I already said it in the introduction, there's never been a time like this. Because my brain told me 4 million. My old man, 15-year day trader is like 4 million. And I'm like, wait a minute, 45 million? But anyway, 1 million float, 45 million shares in one candle. That tells you, that's 45 times float rotation. That tells you got to be either very, very, very careful shorting this thing, or you just need to avoid it altogether. That's the biggest thing that I see a lot of traders ignoring or not taking serious enough. When you've got that kind of float rotation, you have to be so careful. Next thing is the volume prediction. Okay, so what we're looking to do is take the pre-market as well as the opening candle of the day and extrapolate that over the day to make a volume projection. So right off the bat, as I mentioned, with this kind of volume that early, there's a high likelihood that this thing's going to trade high volume all day long. So that is another warning signal. And that applies to even non-float or non-low float stocks. Because listen, I don't care if it's 100 million float, 300 million float. If you've got a volume projection on GTEC that tells you this stock is trading 50 million shares in pre-market, this could trade 200-300 million on the day, even if it's not a low float stock. Huge red flag. Got to be very, very careful with this thing. Next thing you're looking for is those big swings in the volume, that U-shaped volume, and we see that every time the stock breaks the high of the day. So notice, when it breaks the high of the day here, volume pulls back hard, breaks the high of the day again, we get the third biggest candle of the day going into the middle of the day. And even here, look at this volume candle at noon. That's the 2, 4, 6, 7th highest candle of the day. That is telling you that this stock isn't done yet. You got to look for those huge volume spikes. And even, I know GTEC even faded into the end of the day. And you could say, well, Jesus, a good short here. But that volume going away is what you're looking for. So if you are looking to short these stocks, wait for the blow off top, as we say. Wait for afternoons and wait for that fading volume. Again, let me jump over to the 1 hour chart. And you can see, it's pretty clear the time to start looking to short this stock. Look at these 1 minute candles. Still blown away by that pre-market candle. But anyway, look at next hour candle, then you get the pullback, and then you get fading volume all day into the close. So avoid mornings on these high volume stocks, especially float rotation, and wait for the turn on the price action and the volume. So that's the biggest things I want you to keep an eye out for. And then the other thing is, whether long or short, don't fall in love with the news. Okay, that is, again, I think one of the biggest things that newer traders trip up on is they read too much. They do too much research. Ultimately, a stock like GTech, it's not a quality stock. It's not an investment. It's just a day trading instrument, a day trading vehicle, as they say. So don't get too in love with the news, long or short. Okay, so don't be a true believer on a press release. And on the short side, listen, you can have a very, 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 very dubious press release and still have a stock that goes from $2.50 to $10 before noon on 50 million shares in pre-market. Doesn't matter what the news is when you've got that kind of volume, that kind of float rotation, and that kind of price action. I mean, that is the biggest mistake I see newer short sellers make. And like I said, time of day. Maybe you've been stuck in these stocks. You get squeezed out, you get margined out, you get your shares bought in, which will happen, and then the stock craps in the afternoon and closes basically. I mean, GTech closed on the low of the day, post 9:30 open. And if you can avoid mornings, if you can avoid float rotation, and if you can avoid getting too biased, you can much more likely profit on these big squeezers. Or, no one wants to talk about this, wait for day 2, wait for day 3, wait for day 4, because at the end of the day, these are momentum plays. They're FOMO plays. Everyone wants in. And if you can be patient, we call it the 3-day rule, us old school day traders. You just see fading volume, fading price action. And then when the crowd moves on and everyone forgets about it, that's when they start breaking down through resistance levels and then crack, typically gap down in the morning. You cover into that. So don't try and be first. That might be the most important rule, in my opinion, of short selling. You never want to be first, because if you're that guy at first, shorting at $4 or $5 in pre-market, and it goes to 10, you blew up your account. You've got $5 in your account, and then you see later in the day the volume goes away, price action cracks, breaks through support levels, and closes on the low of the day. Now you took a huge loss when, if you were patient and knew to look for these things, you could have been a profitable trader in this niche. So let me know in the comments. I'm kind of curious. I've been there. I tell you, I started out predominantly a short seller, but it was a different time. I think back to when I got started back 2007-ish. We didn't see this kind of volume and we didn't see these kind of moves. So it was, I hate to ever say trading is easy, but I think it was easier and the squeezes weren't as big and you could get out. So have you taken that big loss in shorting stocks? Let me know in the comments below. And if you have, you're struggling with these things. I mean, you're struggling with FOMO. When I say FOMO, fear of missing out, if you're entering stocks long or short too early, check out the StocksToTrade team. I talk about psychology, my experience. I mean, listen, made every single mistake in the world. Nobody is perfect in trading. You make mistakes every day. I mean, you're never perfect. You're never done. But if you can recognize those mistakes and minimize them, that's how you can be here 15 years later. Check out the StocksToTrade team. I think I can really help you with that. All right, everyone, have a great day. We'll see you in the next video.